Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the market site with Brian Joyce. He's the Managing Director on Nasdaq's Market Intelligence Desk right behind us over here. We're going to do some chart talk on the bank index as we go into the key earnings season with the big banks reporting tomorrow morning. Brian, it's great to have you on with me as always. I don't know about you, but I'm excited to shift the narrative away from macro and start looking at some stocks.
Absolutely. So we have the big banks reporting on Friday. We follow the big banks so closely because they're in so many different business lines. They're not just lending, but they're doing a lot of other things, particularly in the capital markets. And so how they report, what their guidance is, that a lot of times will trickle down to many other different companies within the industry.
All right, let's take a look at the chart that you have up here. It looks like it's a bank index versus, or the 40-day moving average is what you have on there. What is that suggesting?
So this here is a ratio of the BKX index versus the S&P 500. So when the numerator is outperforming the denominator, the ratio would trend higher. So in this case, the opposite is happening. The denominator, which is the S&P 500, is outperforming the numerator, the BKX index, which encompasses a lot of the large cap banks in the United States. So what this tells us is the trend is down. The BKX is underperforming the S&P 500. I put the 40-week moving average there because that for me is a signal. If the ratio is trading above that average, then I'm more optimistic. And if it's trading below it, I'm more pessimistic about it. So two things that are pessimistic is, again, it's a clear downtrend, and we're trading below the 40-week moving average.
All right. Now, does it tell you anything else? Does that short term, it suggests more negative action, if you will, but can you see anything longer term from here to discern any trends?
If we could see a little bit further back, we could see we are approaching some lows. We're not there quite yet, but some lows seen in the middle of 2016, which is when the market was bottoming out and coming out of that 15-16 recession. We did have, a little rally here. This is reflecting, the sharp reversal in January and February for the banks, which were a very hard-hit group. The BKX was down about 30% in the fourth quarter. So we did see a bit of a relief rally here and some short-term outperformance. But the dovish Fed pivot in late March, we see that really hit the banks, and thus the BKX is more recently underperforming. For me, the longer-term trend in this ratio, this relative strength, is telling me there's better opportunities out there than the banks. So longer-term, if you're, it depends what type of investor you are. On an absolute basis, banks could be attractive, but on a relative basis, right now, I'm still biased towards the S&P 500 and other sectors that are outperforming.
All right, Brian. As always, appreciate the chart talk. Thanks so much for joining us at MarketSite, and thank you for joining me for Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.